Ethereum is the greatest trade in the history of all financial markets. Bold call, bold call. I'll get into that near the end of this video, but it really has to do with the big money piling into Ethereum in particular right now. They're coming to the crypto markets more broadly. They're getting into Bitcoin. They're getting into Cardano and Polkadot and Solana. But Ethereum is big money's baby right now. Also, some very big Polygon updates for you. My name's Lark. Every day I make videos talking about cryptocurrency investing. So if that's a topic that you would like to learn some more about, make sure you subscribe to Lark Davis channel, gently tap on the thumbs up button just for the YouTube algorithm, and click on the notification bell to know when I put out a new video. So let's go ahead and take a quick look at charts here, see what is going on. It's been a few days since we've looked at the Ethereum charts. Now what's interesting is that Ethereum has been trading right in this range here, which is just incredible. So this is where we saw the previous resistance at. Now we've seen this zone of previous resistance now flipped into a zone of price support for Ethereum. It's incredible too that we actually saw this double bottom pattern play out basically to a freaking T, with the price breakout target getting hit before we start seeing a bit of resistance coming in. Now this, of course, here is the next big area of resistance. That is where the price has indeed stalled out at. Fascinating stuff to see here. Now, we also, I think we must note this because it's very, very important. We've seen the volume basically falling off throughout most of this run. Now, we did see some pickup here once we broke out past that zone of resistance. Flipping, of course, now into support. We still saw the volume picking up there, and there. However, the overall trend since our initial reversal has been that the volume's kind of been falling off, especially over the last week or so. You can see the volume's been falling off, although the price has been rising. So that's, of course, quite interesting to note. Now, let's bring up the RSI here because this is a very important indicator for us. Let's clean that chart up a little bit. So, what do we see happening here? We had a high on the RSI that coincided with a price high here. Then, of course, we had a lower high on the RSI that coincided with a higher high for the price here. So essentially, price is going like this. The RSI is going like this. And of course, folks, what do we call that? We call that a bearish divergence. Higher highs on the price, lower highs on the RSI. Very interesting stuff here. Now, of course, I just want to point out that does not mean that I think Ethereum's going to zero. But we could just be in for a bit of a cool off. This is the daily MACD as well. That is also showing that we are now basically approaching, has not confirmed yet, but we are approaching a bearish crossover on the daily MACD for Ethereum. That would again indicate that we could be in for a bit of a cooling effect for Ethereum. Now the charts are looking pretty similar for Bitcoin right now as well. I think that's worth pointing out. Similar situation. Price is rising, kind of stalling out. Momentum is falling down a little bit for the major cryptocurrencies. That, of course, means that people are piling money into the altcoins right now. We've seen double-digit gains for Luna, for Polkadot, for Solana. They're all going crazy. They're all hitting new all-time highs, except Polkadot not hitting a new all-time high, but the other ones are hitting new all-time highs. Pretty exciting times, really, across the crypto space. But if the majors have a bit of a pullback, that is Bitcoin and Ethereum, that could draw the rest of the market down just a little bit with them over the next few days here. So again, this does not mean the bull market's over, everything's going to zero, but a healthy pullback at this point, I think will be a welcome thing. I mean, look at this run. This has been insane. Come on. Come on. We could use a few days of just chilling out. Let's just take a breather. Let's chill out. Things are going to be okay. By the way, if you want to trade some cryptocurrencies, you need to get yourself an account over on Bybit. It's the best exchange for longing and shorting, that is trading cryptocurrency futures, whether it's Bitcoin or Ethereum or Dogecoin or a load of the other top altcoins. You can also trade spot markets over on Bybit. 0% fees if you're a market maker. And they're running a special promotion right now where you can get up to $1,600 in trading bonuses. Now, $600, that's for doing things like making your first trades, your first deposits, and an extra $1,000 as a special deposit bonus promotion, where if you deposit 1 Bitcoin, you get a $1,000 bonus. If you deposit half a Bitcoin, $500 bonus, and down the way for smaller bonuses. Use the link down below in the description to start your account and start trading today. Of course, if you are an experienced trader. Polygon has merged with the Hermes network in a $250 million deal. That is a pretty big story because the Hermes network, you probably maybe haven't heard the name yet, but it's actually a layer 2 scaling solution for Ethereum. Much like Optimism, much like Arbitrum, we've talked a lot more about those here on the channel. You might be thinking, hey, WTF, Lark, isn't Polygon a layer 2 scaling solution also for Ethereum? It is, but it's a different technology stack. So Polygon is an Ethereum sidechain. Very different from a direct layer 2 scaling solution, which integrates natively with the Ethereum blockchain, something like Optimism, for example, or the Hermes network. Polygon runs in parallel to Ethereum, completely is compatible with Ethereum, but it's a side chain. Very good technological solution. I love using Polygon. Polygon's a pleasure to use with those dirt cheap fees and super fast transactions, but they don't want to stop at just being a side chain. Polygon wants to be the premier layer 2 scaling solution for all varieties of technology on Ethereum, which is of course why they went out and bought Hermes. And they might think, hey, but we already have Optimism, we already have Arbitrum, surely it's all over, Lark. Well, no, we're still super early in layer 2 scaling solutions for the Ethereum network. Neither Optimism nor Arbitrum have, picked up incredible amounts of users yet. Polygon has incredible amounts of users, and getting this merger with Hermes, it's actually a pretty big deal because that allows Polygon to deploy more scaling technology to Ethereum. And of course, by buying the Hermes network, which is already operational, it just allows them to fast track that process basically. By merging, they can move quicker. So pretty exciting stuff here. I'm excited to see Polygon continuing to move from strength to strength and of course just growing all of the time. Polygon, man, love it. Absolutely love it. $5? Come on, Polygon. Let's get it done, man. Now let's start talking about the big institutional money coming into Ethereum. So we had late last week another Ethereum ETF application getting put in with the SEC in the USA. That's, I think, the third or fourth Ethereum ETF application now. Obviously, there's like a dozen Bitcoin ETF applications, including now half a dozen Bitcoin ETF applications backed by CME Bitcoin futures, which are paper contracts and are total junk. Now, the SEC hasn't come out and said that they would prefer to see Ethereum ETFs also being done with CME Ethereum futures. That's probably what they'd want, though, if that's what they want for Bitcoin. Still, though, it shows that there is just this continued demand from big money to get exposure to these assets, which is exactly why you see this continued push by all these firms to offer these products to people. People want Ethereum ETFs, they want Bitcoin ETFs, they want cryptocurrency exposure via their traditional brokers, which is why these companies keep pursuing these products. Now, what's very interesting, this story really caught my attention the other day. Institutional clients are pushing the New York Digital Investment Group and Fidelity to offer more Ethereum services. Now, this is a very interesting story because obviously, as we have been discussing here on the channel for the last few months, institutional demand for Ethereum has been surging like crazy. Institutions are waking up to all the value propositions for Ethereum, all the stuff we talk about here on the channel all the time. They are waking up to that. You have firms like the New York Digital Investment Group. They have Bitcoin funds. They're really deep into Bitcoin, but they have zero Ethereum products. Zero. They're missing out on a big economic opportunity there. I think we'll see firms like NYDIG coming out with Ethereum products, and that we'll also see Fidelity, which has really been very heavy into Bitcoin over the years, also expanding the range of products to meet customer demand for Ethereum. The clients want it. People want Ethereum. People like Bitcoin. People aren't giving up on Bitcoin. But with so much going on in the cryptocurrency space, all these guys are saying, hey, like, yeah, we like Bitcoin. That's cool, but we want more. We want more than just Bitcoin. Give us access to Ethereum as well. And of course, over time, we're going to see different Solana products and Terra products and Polkadot products and Dogecoin products. It's probably going to happen. They're probably going to get Dogecoin products because that's the reality that we live in. All this stuff will come out. Imagine going to your brokerage account and be like, yes, I would like to buy $100,000 of Dogecoin ETFs. Thank you very much. You know that's going to happen someday. You know it is. Just accept that reality and come to peace with it. But the institutional demand is rising like crazy. Cathie Wood's ARK, they have been buying Ethereum, Grayscale, Trust shares, NYDIG, and Fidelity, of course, getting pushed by their customers to get those Ethereum products out. We have Ethereum ETF applications rolling in. We have massive demand on Coinbase from their institutional clients for Ethereum. We proved that via the Coinbase Q2 financial reports, which showed that Ethereum outpaced Bitcoin in terms of total volume, and that 66% of the volume on Coinbase is coming from institutional clients. It's very, very clear. Institutions want Ethereum. Now, as to the title of this video, Raoul Pal, he has called Ethereum the greatest 6 to 9 month trade in the history of financial markets. It's a bold call, and I like it. Obviously, I'm a big Ethereum bull. I think we could see Ethereum at $10,000 by the end of this run. I think by the end of the decade, I mean, with everything going on with Ethereum, sky is the limit here. I mean, do we see a $30,000, $40,000 per Ethereum by the end of the decade? It would not be that crazy when you start to understand the supply mechanics that are going on with Ethereum. Now, as Dan Tapiero points out here, Ethereum, it's DeFi. It's all about DeFi. Holy cow. Ethereum, of course, is the king of DeFi, whether as a collateral asset or as simply the biggest applications. We have NFTs, biggest NFT marketplaces, which are all priced in Ethereum, live on Ethereum. We have Proof of Stake coming. We have ETH 2.0 coming. We have continued lows of supply on exchanges. So as they pointed out here, only 13% of the entire Ethereum supply on exchanges. And this was actually a while ago. I think when this was written, I think it's lower now. I think we're under 10% for total amount of Ethereum on exchanges, which is incredible. The demand for it has been off the freaking charts. And all that's happening while this is happening. So this is watchtheburn.com. This shows you how much Ethereum is being burnt by EIP 1559. Right now we have a net reduction of issuance by 35%. So we have seen, since EIP 1559 came on board, we have seen 158,000 Ethereum given out to miners as rewards. During that same time, we have seen 55,000 Ethereum being burnt. That means a net issuance of only 102,000 instead of 158,000. And that's been like a week. That's been a week that's crazy. Now, we're not deflationary yet. Ethereum is still inflationary, right? So this cut our yearly emission from about 4.3 or 4.4% down to like 3%. That's cool. That's a big reduction right there. But then you need to realize, what do we have coming? We have the triple freaking halving coming, which is going to reduce the annual inflation rate down to 0.43%, which would make Ethereum deflationary when that happens. That's happening in the next 6 to 12 months. It's big. It's big. The economic implications for what's happening on the Ethereum network right now, being the runaway leader of the smart contract platforms, the total value lock, total users, total applications, NFTs, all this stuff, plus proof of stake, plus this burning mechanism. It's crazy stuff, man. This is price rocket fuel right here, which of course bodes well for where we are going to see the price of the Ethereum asset going in the mid to long term picture. Short term, tomorrow, day after tomorrow, you can always get some price pullbacks, and that's absolutely fine. Anyway, your question for today: do you agree with Raoul Pal's statement that Ethereum is the greatest trade in the history of financial markets over the next 6 to 9 months? Or is he a little bit high on the Ethereum hopium, and maybe there's a much better opportunity out there that we should all be paying attention to? And if so, what is that opportunity that we should all be paying attention to instead of Ethereum? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.